Good morning, everybody. This is Roger Swally and the Mortgage Czar. I want to talk to you today a little bit about adjustable rate mortgages. If you're in an adjustable rate mortgage right now and you have the ability, you want to get out right now. I've been speaking with a lot of the major banks, First Tennessee Bank, Bank of America, SunTrust, Comerica. All of these banks have been telling me that they expect to see double-digit interest rates by the year 2011, at least by the end of the year 2011. I think this is one of the reasons why they're holding on to so much of their money, so they can lend it out at those kind of rates at a later time. At least that's what I speculate. If you're in an adjustable rate mortgage, you need to get out now. If you're upside down and you don't have the equity, take whatever money you can and pay down the equity you can in your home. If you've taken money out of the stock market, get it out of the CD, pay down the home, refinance the home if you want to stay in that home, and refinance it at a lower rate, lower fixed rate right now. Okay? That is imperative that you do so now. Rates are not going to remain this low as they've been, and the banks are speculating they're going to see them as high as double digits like we did in the 1970s. Think about what's going on here. We're adding more cash into the system. You're going to see double-digit interest rates possibly. We don't want to take that risk. Okay, if you can't afford to pay down your if you're upside down in your mortgage, sell your extra car, sell your boat, sell your motorcycle, sell whatever you can, have a yard sale, create a new budget for your family, and start paying down that mortgage, the extra equity. If you are in an adjustable, you're at a pretty low rate right now, you can start paying down principal to get it to a point over the next 12 months where you can refinance it. Or sell the home, take a hit, come up with some extra cash somehow, maybe in some of the ways I've mentioned, and buy a new home. Right now, we have the largest bargains that you are ever going to see in the next 25 years. Don't be a shoulda, woulda, coulda. I could have bought back in 2009 this house for $150,000, and now it's worth $500,000 10 years from now, which is what's going to happen. Okay? Buy homes now. If you've taken your money out of the stock market and you are liquid, take your money out of those CDs and start buying real estate now. That is my recommendation to you. My prediction is housing values will stay flat through 2009, through 2010, and they will start to creep up again in 2012 at rates as high as 6 to 12%, depending on what area of the country that you may be in. In some of the hotter markets, we're probably going to see higher appreciations than that. And in the next 10 to 15 years, you're going to see these properties now that are on the market for $150,000 to $200,000 selling for $600,000, $700,000, $800,000. You cannot make that kind of money in the stock market. Okay. If you pull all your money out of the stock market, so that don't panic. You got time. I don't think this is going to happen overnight. But I would let these CDs mature. Most of you should be in short-term CDs anyways. Anyone who went into a 5-year CD, I wouldn't have recommended that to anybody. Any of the CDs that are maturing, you should start looking around for real estate deals right now, whether they're going to be primary residences or you're going to hold on to them as rental properties, because now is a spectacular time. People are looking at rent. They can't afford to buy. People with bad credit, they've got to rent homes. They cannot. So you've got a tremendous opportunity if you've got some liquid cash sitting around. You want to buy real estate and buy it now. Okay. The stock market. The stock market should regain momentum in the future. I see a Dow 10,000 in the next 24 months. If you look at the Dow right now, you know, we're in turmoil. We're down 76 points on the day, yet we're up. We're at 84.36 currently. That's 10% of where we were in early fall. Okay? All of you that got out of the market and rushed out of the market in the fall, if you had gotten into the market in the fall when everybody else was getting out, you would have already made 10% on your money. Okay? There are some, now you want to be particular about what stocks you are buying. I'm not going to recommend any stocks. I would recommend that possibly if you are going to be buying stocks that you find yourself a good stockbroker, or if you're going to do some internet research on companies that are paying high dividends and are highly capitalized and are undervalued. There are a tremendous amount of undervalued companies out there right now because people have sold off their entire portfolios due to fear. You're going to see a Dow 10,000 in the next 24 months, okay? So that's going to put us up yet another 10 to 15% in the 24 months, and I don't see you making, I don't see sitting in a CD you making anywhere near that kind of money, even if interest rates do rise into the double digits. You know, that's your best money is going to be put in real estate. So buy real estate now. Get out of adjustables. If you can't get out of your adjustable now, your main focus should be to take every bit of cash you can and stop buying luxury items, eat in for dinner, and pay down that equity and refinance into a low fixed rate as soon as possible. If you can do it right now, then do it right now. Don't wait. Buy stocks, be selective, and buy real estate. Buy. This is Roger Slalian, Mortgage Czar, signing off. Keep your dreams big and your worries small. Have a great day.